Today, the market bounced on high volume and the tech sector is still looking the strongest. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today SPY was up 1.75% and we did get that bull breakout above the resistance, which was the previous daily high right around 392, and we had the bull breakout above critical resistance at the 200 daily moving average at 393. Now, we talked about in order for this to be more than a dead cat bounce, we had to get the higher low into the higher high, and that is exactly what we had today, because if you look at this chart, we bounced from a higher low back into a higher high, and now above 393, we are looking to come into this range of resistance at 398 to 400. Now, keep in mind, we have a very aggressively sloping negative 20 daily moving average and 50 EMA of resistance right around 396 to 397. So if SPY wants to remain in a downtrend, this is likely going to be a lower high before the next lower low, which means we would see a sharp reversal from this negatively sloping 20 daily moving average. However, there's always the possibility we break through that resistance and come up to 400, and if we break 400, we are looking for that gap close at 408. So as I always say, you need to let the price action do all the talking, and right now SPY above 393 is the possibility that we are breaking the downtrend. If we break down below 393, it's very possible this is just the lower high and we're continuing down back towards 380, so do keep that in mind. You have a very well-defined risk level right there at 393, and if we break above 400, you're getting a lot more bullish for the gap fill at 408. Now, the other thing to pay attention to is the volume, and today was high volume and a very bullish candle, so there is a good chance we can continue to climb higher from here. Today, we were up 2.64% on the NASDAQ 100
triple Qs
on an extremely high volume bullish candle that closed outside the upper Bollinger Band, which was that resistance right around 305. So when you look at SPY going from a higher low back into a higher high, and you look at the tech sector, which has been absolutely very strong through all this financial crisis, you could see a very clear relative strength in the triple Qs breaking above that previous daily high at 300 on a very bullish breakout. So with this bull breakout, we have a very good chance to retest the highs right around 312 to 313, and then above that, we'll likely start trending towards our double bottom price target because we still do have the double bottom off of 260 while we're above the neckline at 294. So this is a very bullish chart, and it's all happening on very high volume, and the tech sector, especially the triple Qs, have no exposure to all of those financial stocks selling off, and that is why they are so bullish. So looking at these triple Qs, you have price action above all of the moving averages, and you are developing a strong bull trend above the 200 daily moving average, so it is without a doubt going to be the big tech stocks leading the way higher. So in the triple Qs, you need to stay bullish above the higher high breakout at 300, and there is still the possibility we get a little bit of a pullback to a higher low before we continue higher, but you want to put your focus on these big tech stocks that are currently doing the best and have been absolutely obliterated last year and have a lot of ground to make up. On the Dow Jones, we were up 1.16% today, and the Dow Jones is continuing from that dead cat bounce back up towards the resistance at 324, but we have no clear price action back over that resistance. We need to see the Dow breaking above 324 and then 327, and then we can say it's possible we are reversing the downtrend. But as you can tell, we have to get all the way back up to 335 before we break out to a higher high. So if I just draw a very simple resistance trend line, you can see it is possible we do get a lower high situation between 327 and 330 and still continue lower. And we do have the gap fill at 311. So when you look at the chart of the triple Qs and you look at the chart of the Dow Jones, they are completely opposites, with the triple Qs looking bullish and the Dow Jones looking bearish. Typically, I like to see all of the indices rallying together, so it's not a great sign for the health of the market that we have a strong tech sector and a very weak industrial financial sector. On the Russell 2000 IWM ETF, we were up 1.37% today, and I am still calling this just a dead cat bounce. We don't have the same volume on this bounce that we have on the triple Qs. We are still below all of the moving averages, including a negatively sloping 5 EMA, and we did get rejected from the resistance today at 177. Now, with that being said, this is a critical support at 170, and there is the possibility the bulls are still working on reversing this very impulsive sell-off, and we still do have a gap to fill up here at 181. So I do give it the possibility this dead cat can bounce up to fill that gap, but then I would not be surprised if that was the lower high before the next lower low, and at some point we do come break down below the 170s. So just be very cautious chasing something this week, even if we are going to indeed get a bounce up to the 200 daily moving average. We need to see some type of trend reversal into a higher low, into a higher high to say that we're reversing the downtrend. So be careful with the small caps, they're still looking relatively weak, and this is still just looking like a dead cat bounce. On the RK ETF, we were up 3.07% today, so we continue to see these tech stocks doing very well, and RK is one of those ETFs that has a lot of tech exposure. However, when you look at RK, we still have a downtrend, and we're sitting right on top of resistance at 39, which is exactly where we could get rejected to another lower high and then go back into another lower low. So look for critical resistance at 39 and then 40.5, and if we can clear all of that resistance, then we can start getting a lot more bullish. If we break down and get rejected from resistance, we're looking for support right around 37, 34.6, and then the gap fill down here below 32. On the VIX, we were down 12% today, so the VIX is getting crushed, but overall, the VIX is just getting way too far overextended, and these Bollinger Bands are needing time to expand. The VIX did break down below 24, but it's going to remain a volatile market above 20, and remember, I continue to tell you volatility works in both directions, and that is why you're getting such face-ripping rallies in this high volatile market. High VIX does not guarantee that you only go lower, and a lot of you probably found that out the hard way today. So watch the VIX closely, because in order to get back into a bull market, we should see the VIX crushing all the way back down below 20, and right now it's still elevated. On Bitcoin, we're currently up 2.5%, and Bitcoin is right at that critical resistance at 25,000, which it needs to break to get to our next price target at 30,000. We're bouncing right off of where we needed to, which was this support zone right around 24,000, and if we break that, we could come all the way back to 22,400. On Google stock, we were up 4.38% today, and Google had the exact move we were looking for on the breakout above 95.6. We are heading right up to that price target at 102, and we are very likely going to reach that target tomorrow. Once we hit that resistance, it is going to be very strong resistance, but if we break it, that's incredibly bullish for a run back up towards 106 and 110. Critical downside support remains this breakout at 95.6, and that is a higher low into a higher high, so it does look bullish. On Amazon stock, we were up 4% today, and Amazon also broke through a critical resistance, which was that level at 98. From here, we should test the critical resistance at 102, and if we break 102, we are very likely going to my price targets at 109 and then 115. Critical downside support is now 98, and this 50 EMA and 20 simple moving average zone right around 94. On Microsoft stock, we were up 4.05% today, and Microsoft blasted right through that resistance at 266 and reached our next critical resistance up here right around 274 and closed above it. So looking at this on Microsoft, this looks like a higher low into a higher high, which is another bullish breakout in the big tech stocks, which means Microsoft is likely trying to get up here to 283. You can watch for support now at 274 and 266, but there's a good chance we need to cool down because we are way outside that upper Bollinger Band. On Nvidia stock, we were up 5.42% today. After we broke through that resistance at 244, we got the short squeeze we were looking for, and we almost hit our price target at the gap fill at 258. There's a very good chance we fully close that gap tomorrow, and if we break through that gap, we have our next target higher at 267. This is bullish above 237 and 244, and if we break that support, you're looking for critical support at 227. On Tesla stock, we were up 2.04% today, as Tesla also had a bull breakout, which was that close back over 183, and we're going to have critical resistance now between 186 and 192. Above 192, we should retest the high right around 197, and if we can break above 197, this is going to look a lot more bullish. Be cautious below 197 because we could still get rejected from a lower high and try to come back down towards critical support zones between 183, 173, and 167, and if at any point we lose support at 167, we are looking for the gap fill at 146. On Apple stock, we were up 1.87% today, and Apple is right here at the critical neckline breakout of resistance at 156, which is going to be an inverse head and shoulders breakout if we do start closing above resistance, which can take us to 163 and then 170. We've been talking about the possibility of Apple being an inverse head and shoulders, and you can see now it's very clear that right shoulder is building out, and we just need the confirmation of the breakout above the neckline. For that reason, that is critical resistance at 156 and critical support at 150. On the financial sector, we were up 1.91% today, and we did bounce up from the support zone and close the gap at 31.87, but this still just looks like a dead cat bounce trading below the negatively sloping 5 EMA. To get more bullish, we need a higher low, higher high, and breaking that resistance at 32.5. The industrial sector was up 1.29% today, getting that dead cat bounce back up to close the gap at 98.3 and still in a very strong downtrend. There's a very good chance we're coming down to 95 because we did get the double top. On the healthcare sector, we were up 0.93% today, and the healthcare sector is continuing that dead cat bounce, but it's now into a higher low, higher high, and we're coming right up into the resistance zone between 128 and 129, and we're still in a downtrend below 130. The energy sector was up 1.09% today, still below the lower Bollinger Band, so this is still a dead cat bounce that could take us up to fill the gap at 80.3, but then I'll be looking for a lower high to come down and fill the gap at 73. So jumping back over to the S&P 500, this is a very mixed market because we have downtrends in the S&P 500, the Dow Jones, and the small caps, and we're seeing a very weak financial and industrial sector, but we're absolutely seeing a face-ripping rally in the tech sector. When you get a market that is this bipolar and there's other sectors that are looking strong while others are weak, you want to go to where the strength is and focus on trading those, which is going to be in the triple Qs. Those big tech companies have a lot of cash and no exposure to the financial stocks, so you need to focus there until we get out of this storm and get more clarity of whether or not we're going higher or lower from here. Like I always say, let the price action do all of the talking and then trade accordingly. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. You can find out how to join the Stocks Channel Discord by clicking on the link below. I also have a trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message and only trades the ETFs TQQQ and SQQQ. You can find out how to join Bank by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.